Good evening, everyone. Welcome to RadioSilentPlay.com. I am your moderator for today on March 22nd, 2014. Let me start off with saying I am not a financial advisor. Please do your own due diligence when trading any stocks or options. Trading stocks and options require lots of risk. Okay, what we're going to do today is we're going to go over the big boards, the big markets, the big market indexes. As you all know, we've been garnering positions on the short side. Okay, some traders still not understanding of what the RSP strategy is. Well, this is pretty much what it is. It's patience and looking for signals, key signals. This past Friday, I mentioned that it was options expirations. The markets were going to be played with. Okay, remember the institutions know what you're trading. If you're going short, these guys will shake you out. They'll take your money. Alright, and that's the bottom line. Usually what I tell you is to take positions for a month, 2 months, 3 months, because when you get these positions, you can actually accumulate and you're garnering a strong position for a longer term. Do we have opportunities for scalps? Yes, we do. But with that said, you want to kind of position yourself for these type of times, and what we're looking at is big reversal days. If you look at the Dow, okay, you had a big reversal candle right here. Okay, you hit a high. If you connect these two pivot highs, that's where your resistance was, and it hit this and then it closed near that 20-day moving average. If the Dow closes below this 1628 level, okay, you're talking about the next support is 1613. Okay, so you have to understand that you have big correction here if it does not hold. Alright, let's take a look at the SPY. Okay, we told members to watch the 188 level to 189. There was not much upside. I said that it was basically 2 to 3%. It hit a 189.02. Okay, in the beginning of the market. The day before, you only had about 80 to 90 million volume. And if you look right here, it doubled that. 163 million. Okay, now let's take a look. Let's talk about why. Okay, remember, we posted on the Fed. The Fed had its FOMC meeting with Janet Yellen, and she said there was going to be a 10 billion cut on QE. Okay, so now what does that mean for the markets? The markets are not going to have that liquidity that it had before. There's no more pumping the markets. Okay, institutions are not going to be buying bonds, and when they don't buy bonds, what that means is interest rates go higher. Interest rates go higher, markets go lower. Alright? So if the Fed says taper or claims taper, the market's going to feel that. Right now, what's happening in China, okay? Same thing that's happening now in China happened in 2007 when we had our issues with mortgages. Alright, they're having pretty much the same thing. We're having issues in the Ukraine. So now take a look at this, okay? We breached this top, okay, and then we came down and we closed at 186.20. Now watch that 185.75 level. Any move back to these levels, okay, is a shorting opportunity. Alright, my level that I've been telling my members is at 184.70. If this closes below 184.70, watch out. We're going to test at 182.50, which is a 50-day moving average, and then we likely will test this 180 and maybe even go down to 174. Remember, 2014, I'm saying is a bearish year. All right. Usually markets trade in cycles. 2008 to 2014. Okay, you had a bullish move. Now look for the markets to start pulling back, have a short-term correction. All right. Let's take a look at JPM. Okay, JPM, I usually say it's what moves the markets. JPM hit a high of 61.20 and closed at 60.17. Watch this 60 level. Okay, so if this stock closes below 60, you'll probably likely look at 57.95 level. It's pretty big gap. So any move from 60 to 61 will be a shorting opportunity. All right, and just have your stop over here at 61.20. Okay, let's take a look at the IWM. The IWM, I told members, watch this 118 to 119 level. Okay, it actually hit a high of 120.26, then it closed at 118.61. If the IWM closes below 118.30, you'll see a move down to 115.42, and I think that we'll test that 114.20 mark. All right, so there's plenty of opportunity over here. And remember, just have your stop. If the market closes above 120.50, then it stops us out, and we regroup and we look for the key signals again. Okay, this is how the markets work. All right, you're not always going to be pinpoint on the price. That's why you're going to take positions for 1 to 3 months, and this is how you do it. And if the IWM is a little bit too expensive, then look for to purchase the TZA, and that's the triple time. All right, and you grab calls there. All right, let's look at the IBB. The IBB had a huge reversal bar here, and it closed below the 50 EMA. All right, any move back to this 50 EMA is going to be a shorting opportunity, and you don't see support down till 235 and 225. So you got big room here to grab a position for puts on the IBB. Okay, the biotechs, they were bullish, but now we just broke this right here, this level right here at 248. We just broke that. So people that bought up here are going to want to break even. Okay, and that's what charts mean. When people start buying tops, they're scared, and it's going to create panic, and it's going to create a sell-off. Look at Goldman Sachs. Okay, Goldman Sachs, if you look at this pivot high back in 2014 when you had that Christmas rally, you touch it with this, you had a right here, a bearish topping tail. Now if you look, now you're having this big engulfing candle right here. Okay, so if this closes below this 168 mark, which it did, 166.95, you don't see support down to about 165 and then 162. So you got an opportunity. Most of these stocks closed red on big reversal, on big volume. Okay, now let's take a look at GLD. Okay, GLD had a big rally. Okay, came up here. We talked about the W pattern. Now it just broke and closed below this 20 moving day average. I still think that money's got to go somewhere. Okay, so whether it's going to go into bonds, or if it's going to go into the metals, I think that this is probably the market that's the least vulnerable right here, because you have a 50-day moving average of 25.19. If it hits 25.19, I think that's going to be a buying opportunity. If it goes down to 24 level, I think this will hold. Okay, so watch gold between 124 to 126. I think that will be a reload area for GLD. GDX, okay, same thing. If it hits this 24.80 mark or 24.50, I think it's a buy. 24 level, even better. Okay, the GDX is all the best mining companies. All right, so just understand that if markets are leaving, the S&P 500, they're leaving the IWM, it's going to go somewhere, and most likely it will go into metals. This weekend I will be posting long hedge stocks, okay, and there'll be some miners at certain levels, and these are miners that I feel that are long term. They actually have gold and they have silver, so I will be posting that. Okay, let's take a look at the USO. I talked about the USO, okay, buying the 35 level. It actually hit this 36.20, okay, and now it's retraced. Watch 34.50. If 34.50 does not hold, okay, you got a big drop down to the 33.50 level. So just watch these levels, because USO may bring a shorting opportunity. All right. Again, thank you all for tuning in. I will have updates. I will be posting a weekly watch list. Okay, also small caps and option triggers. Those people that are not members, okay, we're giving out a free trial, 30-day free trial, so you guys can start trading using strategy. Okay, thanks again. Okay, have a great weekend.